Ladies and gentlemen, welcome to today's presentation on private equity and the lessons we can learn from one of its most successful practitioners. Our speaker today is a true titan of the industry, with decades of experience and a track record of excellence that speaks for itself. In his new book, The Dealmaker, he shares his insights and expertise with the world, offering a roadmap for success in this complex and challenging field. Today, we'll be exploring some of the key lessons from the book and examining case studies of successful deals that illustrate these principles in action. So sit back, relax, and get ready to learn from one of the best in the business. Guy Hands is a British financier who has made a name for himself in the world of private equity. He was born in 1959 and attended Oxford University, where he studied politics, philosophy, and economics. Hands began his career in finance at Goldman Sachs, where he worked in the firm's London office. In 1994, he founded his own private equity firm, Terra Firma, which has become one of the most successful firms of its kind in Europe. Hands is known for his expertise in distressed assets and turnaround investments, and he has been involved in some of the largest private equity deals in history. One of Hands' most notable achievements was his acquisition of EMI Group, a major record label, in 2007. The deal was worth over £4 billion and was one of the largest leveraged buyouts ever completed in Europe. However, the acquisition ultimately proved to be unsuccessful and led to significant losses for Terra Firma. Despite this setback, Hands remains a respected figure in the private equity industry and has authored a book, The Dealmaker, which offers insights into his approach to investing. Private equity is a type of investment that involves buying and taking control of companies that are not publicly traded. Unlike traditional investments such as stocks and bonds, private equity firms invest directly in businesses and often take an active role in managing them. This allows for greater flexibility and the ability to make long-term strategic decisions that may not be possible with public companies. Private equity firms typically raise capital from institutional investors such as pension funds and endowments, and use this money to acquire companies. They then work to improve the operations and financial performance of these companies before selling them for a profit. This process can take several years and requires a deep understanding of business operations and financial markets. One key lesson from The Dealmaker is that success in private equity requires a willingness to take calculated risks. Guy Hands writes, "You can't make money without taking risks, but you can lose it by taking too many risks or by not taking enough at the right time." This highlights the importance of balancing risk and reward in private equity investing. Another important lesson is the value of building strong relationships with management teams. Hands emphasizes the need for trust and communication between investors and portfolio companies, stating that the best way to make sure your investment succeeds is to work closely with the management team and give them the freedom to run the business. By fostering these relationships, private equity firms can help their portfolio companies achieve long-term success. One case study that aligns with the lessons from The Dealmaker is the acquisition of Burger King by 3G Capital. Guy Hands emphasizes the importance of having a clear strategy and a strong management team in place when making an acquisition, and 3G Capital demonstrated this in their successful takeover of Burger King. By implementing a focused strategy and bringing in new management, they were able to turn around the struggling fast food chain and make it profitable again. Another example is the acquisition of Toys R Us by Bain Capital, KKR, and Vornado Realty Trust. This deal highlights the importance of due diligence and risk assessment before making an investment. The private equity firms recognized the potential risks associated with the struggling toy retailer, but also saw the opportunity for growth and expansion. By carefully analyzing the company's financials and operations, they were able to make a successful investment and ultimately sell the company at a profit. In conclusion, we have learned valuable lessons from Guy Hands and his book, The Dealmaker. We now understand the importance of strategic planning, risk management, and effective communication in private equity deals. Let us apply these lessons to our own work and strive for success in the ever-evolving world of private equity. Remember, as Guy Hans says, the key to success is not just having a great idea, but executing it brilliantly. Thanks for watching. Like and subscribe, and we will catch you on the next one.